Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. Here we are back again in the afternoon session. We go live twice a day, once at 10 a.m. Pacific, then we're back again in the afternoon at 1 p.m. Pacific. So it's 10 a.m. Pacific, 1 p.m. Eastern, then back again at 1 p.m. Pacific, 4 p.m. Eastern. So today we want to talk about the best retirement plans for self-employed individuals, specifically looking at the solo 401k versus the SEP IRA individuals. Now, if you're on YouTube, thanks, I was just verifying the audio. If you're on YouTube, please please subscribe. If you subscribe, you'll get the notification, especially if you hit that notifications bell of when we go live. So if you want to jump on and ask a question or see what other individuals are asking, plus, you'll get notifications of when we have our deep dive content. So for example, like I mentioned today, we're talking about solo 401ks versus SEP IRAs, but we have even deeper content, particularly on Fridays. For example, we're in the middle of contribution season. So the last couple of weeks, we've had deep dive sessions, A to Z, regarding all the solo 401k contribution rules. We've broken it out based on how the business is taxed. For example, last week, we focused on sole proprietors. The week before that, we focused on S Corps and C Corps. This week, we'll be focused on multi-member LLCs, taxed as partnerships. But really, all are welcome. We can field all questions. But we like to give that deep dive content as well. So if you subscribe, you get notifications of the content as well. And again, if you've got questions or topics you want to discuss, we love the chance to discuss those topics. So please chat those over. Any question or topic is a good question. If you have it, someone else probably has the same question. So that's a peek at our YouTube channel. You can kind of see how the type of content we're delivering. Now, the other resource we want to highlight is our community. So we've got over 30,000 members. We've got people posting in there all throughout the day, 24/7. It's a great way to go in there. You can post a question. You can see what other people are posting. You can check out our library of videos and webinars. So there's a lot of great ways to learn and to share the knowledge. We also have, you can also see this is our homepage where we link to our daily YouTube sessions as well. You can access it there. You can go to our webinar page, mysolo401k.net/webinar. You can see we have our schedule there. If you sign up there, then you'll get the email notification later with a link to the recording. So there's lots of great ways to learn and to share the knowledge. Now, as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So now I want to go take a look at one of our recent blog posts where we talk about solo 401k versus SEP IRA. Because again, we want to spend some time really looking at those options because those are common choices for self-employed individuals, right? Someone might be looking at both the solo 401k versus a SEP IRA. So we want to compare some of the top features that, just to educate you so you can make an informed decision. So of course, one of the top reasons that someone will set up a solo 401k or a SEP IRA or any type of retirement account is because they're looking to save, right? They want to save for retirement. So they want to make contributions. So a solo 401k and a SEP IRA are both available to self-employed individuals. In order to be eligible to set up a solo 401k, you have to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or a spouse, if any. So if you meet that eligibility criteria, then you can set up a solo 401k. Now, a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. So you can save the most, right? So if the goal is to be able to save, the solo 401k is the best when it comes to defined contribution plans, right? And we talked about yesterday in yesterday's afternoon session about how, there's still time to set up a solo 401k for 2024. So if your business is taxed as a sole proprietor, it could be a single member LLC, taxed as a sole proprietor, it's still possible to set up a solo 401k and make all types of contributions, whether it's employee, employer, or voluntary after tax. So you can still, everything's still on the table. You can still use all types of contribution buckets. You just have to set up the plan and make the contributions by April 15th. But even if your business is not taxed as a sole proprietorship, let's say it's taxed as an S Corp or a C Corp or a partnership, well, it's still possible to set up a solo 401k and make employer and or voluntary after-tax contributions for 2024 by the business tax return deadline, including any timely filed extension. So there's still time to set up a plan and make those 2024 contributions. Now, in terms of the different types of contributions that you can make, a solo 401k is going to have a lot more options than a SEP IRA. So the only type of contribution that one can make to a SEP IRA is the employer contribution. So yes, that can now be made as a Roth contribution thanks to Secure Act 2.0. So if you have a SEP IRA and the provider allows for Roth contributions to that SEP IRA, then the individual can make those employer contributions as Roth contributions. And that could also be done with our plan. But with our solo 401k plan, it already allowed for mega backdoor Roth contributions, which are much more powerful than making Roth employer contributions. Why are they more powerful? Well, number one, you don't need as much income to justify contributions all the way up to the maximum contribution limit. For example, for 2025, the overall limit is $70,000. So the individual can make Roth and mega backdoor Roth contributions to the solo 401k with only $70,000 of self-employment income. Whereas to justify $70,000 in Roth employer contribution and or pre-tax contributions to the SEP IRA, you're going to need many times that amount of self-employment income. So for example, if your business is taxed as an S corporation, to justify $70,000 of contributions to the S corporation, you need 4 times $70,000 of W-2 wages from your business, right? That's $280,000. So you would need a lot more of income to be able to hit that limit. So the fact that our plan allows for mega backdoor Roth contributions is a huge advantage over the SEP IRA for those that are trying to maximize the amount of money going into a Roth account, because you don't need as much income to be able to hit your objectives, which might be the overall limit. Now, even if your goal is to maximize pre-tax contributions, the solo 401k also beats the SEP IRA if that's the profile, if that's the objective. So if your objective is to reduce your taxable income now for the year for which you're making the contributions, well, with the solo 401k, you're not just limited to making employer contributions, right? With the SEP IRA, that's the only bucket you can fill up is the SEP IRA contribution bucket. But with the solo 401k, you can also make elective deferrals. That's another key feature comparison here, right? You can make employee deferrals, employee contributions, elective deferrals. Those are all synonyms for the same type of contribution. So for example, for 2025, the employee limit is $23,500 plus an additional $7,500 if you're 50 or older, or an additional $11,250 if you're age 60 to 63. So the individual can contribute 100% of their self-employment income, dollar for dollar, up to that employee deferral limit. And then if they've got additional self-employment income above and beyond that, they could still make employer contributions on top of that. So like the SEP IRA contribution. So that's another huge advantage for those that are looking to make pre-tax contributions, because you got that employee bucket. So that's what we mean when we say it's easier to maximize contributions. Then You've got other people who are not only looking to make contributions, but they might be looking for other features, such as the ability to take a loan, right? With a solo 401k, if you have a plan like ours that allows it, you can take a solo 401k participant loan. This is where you can withdraw money from your solo 401k. It's not going to be subject to taxes or penalties as long as it's properly documented as a loan and then paid back according to those loan terms. The loan terms are paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. So that loan could be used for an emergency purpose, could be used for some other purpose, right? You might want to put it into your own business, right? Or you might want to invest in something, right? You might have an investment property that you own personally, and you want to use that money to fix up the property. So if you have our solo 401k plan, you're always going to have that as an option to be able to borrow from your plan, then pay it back to your plan. And as long as you pay it back according to the payment schedule, as long as it's properly documented as a loan, which we handle the loan documentation requirement as an optional free service for our customers, then it's not going to be subject to taxes or penalties. Whereas one cannot take a loan from an IRA. No IRA allows for loans, right? Whether it's a traditional, a Roth, a SEP, etc. Okay, another key feature which aligns to what our customers want is the ability to invest in alternative investments, right? In order to set up a solo 401k, you need to be self-employed, right? So a lot of people, for example, they might be a realtor or an attorney or an independent contractor. So a lot of these individuals, their experience, they might be more comfortable with non-Wall Street type investments. They might be more comfortable investing in real estate, or maybe they want to invest in crypto, or they want to invest in tax liens or some type of private placement. Or they do want to invest in a brokerage type investment like a mutual fund or a stock or ETF, but they also want to diversify and put some of their money into alternative investments. Well, with our plan, it most certainly does allow for investing in alternative investments. And we're very hands-on with our customers and helping them open up the requisite accounts and educating them on those solo 401k investment rules, right? Like what are the mechanics of investing in real estate? Those are the types of questions that we're fielding every day. So yes, it is theoretically possible to invest a SEP IRA in alternative investments, but it's not going to be possible through your discount brokerage type of SEP IRA, like a Vanguard or a Fidelity, etc. Those companies only want you to invest in things that they offer, like mutual funds, stocks, etc. So you would have to go to a third-party specialty IRA provider, like a trust company or other financial institution that offers a SEP IRA that does allow for alternative investments. But their structure is going to require that they hold that IRA account. So based on experience and client feedback, those IRA account holders will get frustrated, right? Because it'll take a long time to maybe act on a deal because I got to go through that SEP IRA provider, that specialty trust company or financial institution. So if you want to be able to have direct checkbook control, the structure would require investing that SEP IRA into an LLC. And now you got to maintain the LLC and the costs, etc. Whereas with the solo 401k, the self-employed individual as the business owner can act as the trustee. They do act as the trustee of the plan. That means they can have direct checkbook access to the money. So for example, with our customers, they have a bank or brokerage account set up under the name and EIN number of the plan. Let's say it's a bank account. Now they got that direct checkbook access. So they can act quickly to take advantage of investment opportunities. Next key feature would be the tax credit. So our plan makes the self-employed business eligible for $1,500 in tax credits. These tax credits are not available to a SEP IRA. So in order to be eligible for the tax credit, you have to have a solo 401k plan like ours that includes the automatic contribution feature. So that feature has to be turned on in the plan documents. Certain notices and other forms have to be provided. That's what makes the business eligible to claim the tax credit. Now that's a tax credit, not a tax deduction. So it's a dollar for dollar reduction in the tax liability. So that's going to more than cover our fees to set up the solo 401k for the first 7 years, right? We charge $650 as the initial fee, which includes the $525 establishment fee plus the first $125 annual fee. Going forward, we charge a $125 annual fee starting 12 months later. So for example, next February, that would cover the second year. So if you added up all of our fees over the first 7 years, it won't even amount to $1,500. So our plan is basically free, effectively, for the first 7 years. So we provide a deep dive webinar. We host it with an IRS enrolled agent that goes through exactly how to claim that credit. There's no requirement to actually make those automatic contributions. In other words, the solo 401k owner has the right to opt out of the default automatic contribution percentages that are set. And the fact that the solo 401k owner exercises their right to opt out doesn't mean that the business is not eligible to claim the credit. It still is, because the feature's still in there. They got the notices and the other forms, etc. So that credit is tremendous in offsetting the costs to set up the solo 401k plan. It allows the solo 401k owner to preserve their funds, for example, to make contributions and make more, have more money available, within obviously the contribution limits to make contributions, etc. So it's a tremendous benefit and impact, really, to encourage individuals and allow them to set up solo 401k plans and secure their retirement. All right, well, that goes through the key points that I wanted to touch on. Thank you so much for checking out today's session. Please subscribe to our channel. You get all the notifications. We have tremendous content coming up. We go live every day. We're here. So if you do have questions or comments or topics you want to discuss, we're here to discuss these every single day. We appreciate the chance to discuss them. We've also got a lot of great prepared content that we're going to be continuing to come back with. So if you subscribe to the channel, you'll get notifications when we go live. For example, here on Friday, we'll be back to discuss A to Z, all the rules around making contributions, the mechanics, how to report, different scenarios, specifically for multi-member LLCs and businesses, taxes, partnerships. We've got a lot of mega Backdoor Roth deep dive sessions coming up. We're going to talk about solo 401k strategies, like what's the magic number of income I would need to be able to maximize contributions. So there's a lot of tremendous content. So if you subscribe and hit the notifications bell, you get notified and you can jump on and join the conversation, ask questions, hear what other people are asking, etc. All right. Well, thank you so much, everyone. We do appreciate the chance to discuss these topics, and please continue to engage. Thank you so much.